Welcome to Sky Broking Equity Weekly Market Commentary. Disclaimer: this weekly market commentary is for information purpose only. Before taking any decision, consult a financial advisor. Now let's see the fundamental analysis. Checking out the global cues, US stocks are rallying as Wall Street anticipates central bank reluctance to go overly aggressive with tightening monetary policy, so they could provide a cushion for a growth hit that will stem the Russia-Ukraine developments. Even as Russian troops move in on Ukraine's capital, risk appetite got a boost from Moscow's signal that they could be ready to have talks with the Ukrainian government. President Putin is demanding that Ukraine surrender before decisions can happen, so it wouldn't surprise anyone if talks don't happen at all. The release of the Fed's monetary policy report reiterated that interest rate hikes will soon be appropriate. The report added that some supply bottleneck issues could remain for some time, and the next week, Fed Chair Powell will deliver his semi-annual testimony to both the House and Senate. After hearing from Powell, investors will have a better understanding if they can completely write off that half-point rate increase in March. Now let's look into the domestic analysis. India releases Q4 GDP on this week, which is expected to print around 6%. The headline figure has upside potential as real-time indicators in India suggest that the growth is accelerating, which should be positive for equities and the INR. PMIs later in the week could reinforce this. Now let's look into the technical analysis. Nifty may remain in a high volatile with wide range bound trade with resistances are 16,953 and 17,253, and then the supports are 16,320 and 15,741 levels. Bank Nifty may remain in a high volatile with wide range bound trade with resistances are 37,731 and 38,476 levels, and then the supports are 35,353 and 33,484 levels. So these are this week's technical analysis. Now let's look into the derivative analysis. Based on the option chain analysis, highest open interest for call side is 17,500 strike and for the put side is 16,000 strike. Overall 1,500 points band and the expiry is on March 3. According to the PCR analysis, Nifty PCROI has decreased with a Nifty negative close, and when compared with the previous week, which shows huge call writing is seen. India VIX has settled in 26.74, and when compared with the previous week, it had ended with a high, which shows increasing the volatility. So these are this week's derivative analysis. Now let's check out the recommendations. Coming to the cash corner, buy Coal India above 164. The target is 171 with the stop loss 157. Buy FL above 1201 with the target 1280 with the stop loss 1125. Coming to the F in the corner, sell Nifty future near 16,953 with the target 16,855 with the stop loss 17,050. According to the option strategy, long straddle buy Nifty 16,650 call option above 380 and 16,650 put option above 340. 10th March will be the expiry. Total buy premium is 720. The target is 800 with the stop loss 660. Based on the institutional activity, according to the previous week, the FII net sellers were minus 19,843.52 crores, and for the February month, the FII net sellers are minus 41,771.60 crores. According to the previous week, the DII net buyers were 21,511.79 crores, and for the February month, the DII net buyers are 37,941.25 crores. So these are this week's Equity Weekly Market Commentary. For more market updates, join our Telegram channel and the YouTube channel. Thank you by Sky Broking.